S&P 500 trap explained.
What if I told you that you're currently holding a shitload of S&P 500 and other ETFs, and you might be falling for a huge trap and missing a massive opportunity to make a fuck load of money? Let me show you. Guys, I will never ever deny this. Well, I shouldn't say that, but it's going to take a long time for me to deny that the S&P 500 is phenomenal. You can buy VOO, SPY, really buy the entire American economy and just let it ride. If you're a believer in the US economy, that's where you go and you match the market, beating 98, 99% of those Harvard MBAs out there trying to kill it. But guess what? There's a trap with that. You're missing out on some of the best opportunities out there for buying. But that's why we have our channel. On this channel, we're trying to teach people how to spot opportunities, how to think different. When the market's going down, how you can look at that as opportunity. Because even though everybody out there says that, they say it because the market's been up. But for the market to go down, news will follow the stock price. All the negative will be out there. I've said this in so many videos. All the friends of mine who back in the mid-2000s said, oh yeah, I'll continue buying stocks no matter what happens. Great financial crisis occurs, they all sold. Well, Paul, what you didn't get is blah, 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 blah. It'll always be what you didn't understand is blah, 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 blah. Guys, the world shut down in early 2020. We had a full-on shutdown. But before the shutdown actually occurred, that's when the S&P bottomed. But were you one of the ones who was able to go buy during those times? Now, guys, if you bought...
Oh, okay. This is going to be one of those videos, right? Buy the dip. Ready to buy the dip, everybody. We talked about specifically this on this morning's live stream. The replay of that will come out right after this. Let's talk about that dip real quick, right quick. Let's talk about specifically that dip. Hang on. I got to zoom out. Got to scroll over a bit. All right, right here. This is the COVID crash. Down 35% in 22 days. Are you buying it on the way down? No way. And then there were people right here screaming that this was the bottom. They saw these two green candles and they're like, told ya, genius. And then, oh, snap, never mind. Delete the video. It didn't exist, right? And I'm not saying that we are going to crash. I'm never going to call anything like that. But what I am saying is that if you are looking at a situation like this, which is where we're at today, essentially down 7% or so from the highs, this might not be the bottom. It could go a lot further down. And because it can go a lot further down, why are you putting anything at risk? The 10-20-50 is pointed down right now, and it was pointed down during COVID as well. But when it pulled back up, when the 10-20-50, the outlier trend template, the 10 EMA over the 20 EMA, price over the 50 EMA, on this candle right here, when that happened, that meant it was a bullish trend. And while these people were sweating it, down 35%, you could hang out in cash for 2 months, not have any stress whatsoever. And then when the outlier trend template tells you that stocks are starting to pick up, that the market is looking a lot stronger, you could get in and be up 10%. Just conceptualize this. You can be up 10% while these people were sweating bullets, losing a third of their investment within the span of 3 weeks. You sat in cash, you waited, and then you pounced when the outlier trend template turned, and you're up 10% while they're at break even. That right there, my friends, is how the game is played. This is how the game is played. It's not buying it on the way down. It's not. Because when are you going to get paid, right? Are you going to get paid as it's losing value day after day? No. We know where this is going.
We know that only price pays. And because only price pays, why don't you wait until it starts paying, right? Wait till payday.
Wait till payday. Well, let's continue to see what this S&P 500 trap is.
In 2000, which was the peak of the S&P and the NASDAQ back in 2000, back during that whole dot-com bubble, you still did pretty well holding till today. In fact, if you dollar cost average on the absolute peak of the NASDAQ to today, you would have seen the NASDAQ fall 83%. You would have seen the S&P.
Well, since he wants to pull this out, this is a log chart. It's not a regular chart. Oh, hang on. Peak of the NASDAQ came in 99. The peak ended, I think it was 2017. They're not going to talk about something like that. They won't talk about that. They won't talk about how, oh, wait a minute, it took 17 years to get back to that point. Nah, I'm not doing that. 17 years, that's as long as I've been married to my wife. Give me a break. Yeah, Peter Payne, Cisco. Exactly. There's no guarantee that this comes back up. And if it does come back up, it's not going to be well, I shouldn't say not. It might not be that immediate V that we saw after COVID, right? Something like this, where it's just boom, 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 boom. This is rare. So here's the thing. You don't have to hold it. You don't have to buy it all the way down. When the trend template starts working, you can get in, and you might get chopped up a little bit here, and you can get out when you know the trend template is reversing. Watch it go back down, and you can do it again, and you can buy it, and you can ride it all the way up, and you got profits here, you got profits here, and you got profits here. All the while, no stress. Crazy. Absolutely crazy.
S&P fall.
By the way, this is the channel that decided to make that huge rebuttal screaming returns, screaming reaction video to Jeremy. Might happen to me too. That would be fun. That would be super interesting.
60%. But guess what? You still would have made 14.5% a year in the NASDAQ from then till now, and 11 or 12% of the S&P from then until now. And even if they both fall in half in the next couple of years, it's still a huge return of close to double digits for the S&P and over double digits for the NASDAQ. Those are incredible, but you've also missed out on certain things. Guys, this is Meta. Meta is the one company of the Mag 7 that's up this year. Now, here's what's amazing. Back in 2022, we had a little bit of a...
By the way, why is their camera quality so bad? If this is such a big production, why does it look like it's filmed on like a MacBook front-facing camera? What? This doesn't even look like iPhone quality. I don't understand that.
Fair market. Meta came in right around $400 a share and bottomed at 88. Guys, I'd like you to do me a favor at some point when you're bored. Go watch the videos of what we talked about with Meta and go look at what people were saying back in late 2022 about Meta. And guys, I was dollar cost averaging sub 250 on Meta.
Well, good for you. Did you know it was going back up? No. You were hoping and praying and collecting all those shares like Pokemon cards, thinking, oh, dear Jesus, let me get a couple Pikachus and a couple Charizards and a couple Charmanders, and hopefully one day these will go up in value. That's what you're doing. When you are buying on the way down, you are saying, please go up in value. There's no guarantee. I just don't understand. I cannot conceptualize this. My brain, my itty bitty baby brain cannot conceptualize how people think like this. It boggles my mind.
And it fell to 88. And sure enough, everybody said, Paul, you were wrong. And maybe I was. But I looked at it saying, damn, this company keeps growing revenue, keeps growing profit, and this company's down over 75% from its previous high.
Down 75% from its previous high. Sounds like a winner.
I'm looking at that going, wow, what's happening here? Is this a company that's going to zero? I'm like, if it's going to zero, why is revenue and profit up? Why is there potential for, I remember looking at going, in the US, they generate $40 to $45 per user per year in revenue, but abroad, they're at like, some of them are $4 or $5. I'm like, there's so much more potential. And they were spending $10 billion negative, losing $10 billion a year on their metaverse. And I was looking at going, everybody says it's going to fail. So if it fails, they all of a sudden save $10 billion a year. It made a lot of sense to me. And the stock shot up from there. Now, that's the big trap you're falling for.
Ooh, Rick. He was watching another channel this morning and said you make stages in number 2 and 4 and you don't make money on stages 1 and 3. What's Rick talking about there? Oh, that was the thumbnail of the day. That's a pretty sweet thumbnail, right? Pretty sweet thumbnail. Rick is talking about the market cycle. Stage 1 down here, stage 2, that's your run up, stage 3, and then stage 4. He's 100% right. You can buy calls and make big money here. You can short shares and buy puts over here. Makes total sense to me because that is how the market works. But stage 3 and stage 1, that sucks. You're going to get chopped up all day. Well said, Rick.
What you're doing is you're missing out on these mispricings of stocks and opportunities. I truly believe you have to have the S&P 500 and even QQQ at some point in your portfolio. But what we're trying to teach here is your ability to spot specific companies that you can jump on immediately. Look at a company like what I believe to be Alibaba. I think Alibaba we're going to look back on and say, holy cow, this was a huge opportunity out there. Southwest Airlines. I also look at opportunity.
Let's look at Alibaba. Yeah, I mean, right now, that's a beautiful trend. You're entirely right. You are entirely right. And in fact, I would bet you that the outlier trend template would tell you when that was. In fact, let's take a look real quick. Remove all annotations. Okay, it had a couple. It's had 2 really big moves, one bigger than the next. But let's look right here. When did the outlier trend template turn over? Probably about right here. And look what happened. Rocket ships. And then you could get out. You could get out the 10. You can get out the 20. You can get out the 50. Either way, you made money. You didn't have to hold it down here. And then It crossed over again, 10, 20, 50 on this specific candle right here. A lot easier to see on this side. This one candle, rocket ships, moon emojis all day. So what I'm saying is I could keep here. Let's say we got out under the, we'll say under the 20 to be conservative. I could keep 33% on this trade, and I could be up 64% on this side, and I didn't have to do anything in the middle, and I probably could put it in something else and avoid this this pullback of 21%. You can boil it down to this, and I'm not saying you time in the market. You're looking at the charts and you're knowing how to read them, and they are telling you, hey, we want to go up or we want to go down, and just follow that. Just follow that.
Opportunity. Microsoft back in 2011 and 12, that was my first indication that value investing truly does work, that people's perceptions are not reality. Microsoft back then had the same outlook from people as Meta did in end of 2022. Microsoft's dead. It's a tech company that lost its way, et cetera, et cetera. I'm like, but if they're dead, why are their revenue and profit consistently going up every single year? That's what I want.
They could be the greatest company in the world. I say this all the time. I could be the greatest company in the world, but the worst stock, because all stocks are bad. I need you to, this sounds weird, but all stocks are bad. Why are all stocks bad? Because they're all risk. Every single stock in the market is risk. Hands down, no matter what, it is risk. But every once in a while, they act right. And when they act right, like Alibaba, you can ride those dudes. You can strap on the saddle, right? Jump on board, put on your 10-gallon hat and be like, let's go, pony. Come on, get on up out here. Because every once in a while, they act right. But you don't have to ride them all the way up and all the way down.
I want you to remember. That's what you need to be able to do to get that extra return. You buy the S&P. You dollar cost average in the S&P and then QQQ, and you'll probably from there outperform the market if you start on the QQQ at the right price. But even more important, if you seize opportunities in individual stocks, that's how you can jump on them. That's why we have this channel. That's why we have our community. We have these tools that when you're ready, because opportunities don't last a very long time, you've got to be ready to jump on them. We are not a channel that's going to tell you what to go buy. That would be absolutely terrible to do that. Those other channels out there do that. And guess what? We believe that once the full bear market happens, a lot of those
I like how he points fingers. I hope I'm in this.
channels will pivot to some other way of getting users to watch their videos. We're here to
Oh man, he broke my heart. I wasn't in them.
teach principle-driven investing. And those foundations of that are, one, we're investors, not speculators. We believe that when you buy a company, you're sitting there buying a future stream of cash flow. Because number two, every investment is the present value of all the cash flows you get in the future. So if you're gonna get $1 a year for the rest of your life and you pay $1 billion for it today, that's a bad investment. But that same $1 a year, if you pay $5 for, it's probably gonna be a very good investment. The same stream of cash flows, but what you pay for it today is what matters. And that's our fourth one. A great story can become a bad investment if you pay the wrong price. Now, the third foundation we have, so I skipped number 3, is if we don't understand it, we don't buy it. But what was there not to understand about Meta? What is there not to understand about the S&P 500? What is there not to understand about QQQ? These are very easy business to understand. If you don't understand them, that's why you have to go to our community. Have the conversation in the community. Hey, what are you guys seeing out there? Because guess what? All the best investors ever, they did it with things they understood. Their stocks didn't overlap. Their investments didn't overlap all the time. But if they understood it, they bought it. And the fifth and final pillar of our principle-driven investing. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. Meta, the vote was this company sucks. The vote is this company is awesome. Go look at what they said about.
Okay. And if it does go down, why are you holding on to it? If it goes down 75% and you're still holding on to this, you're doing it wrong. If it goes down 75%, you're doing it wrong. You're doing it wrong. Could you imagine what kind of sleepless nights you'd have looking at your portfolio saying, oh man, I'm such a genius, but my stock is down 75%. You're doing it wrong. And let's say that you bought it right here on this dip. Let's say you bought it on this dip. Let me zoom in just a bit. When it went from 382 to, let's call it 340. How long did it take you to get back to break even? Well, let's just see. This is October of 2021. November of 2023. 2 years and 1 month to get back to break even. Do you really feel like you're doing it right? if this is how you invest, I don't think so. I would rather be going on this side of that V than this side of that V. I just don't get it.
About Zuckerberg here, what they say about Zuckerberg now. The biggest mistake I made was I sold at 200, thinking this company had run up too fast and was going to pull back.
Wait, you're an investor. Why would you sell? I was driving down the road today and I had a bit of an epiphany, and I was thinking to myself, like, I know some people say that they don't want to sell because they don't want to pay taxes. And I'm dealing with a change in life right now, and it's going to be tax beneficial to me. And because of that, I was thinking, you know what? There's actually a real strong correlation here. If you're telling me you don't want to sell an investment because you don't want to pay taxes on your gains, that's the equivalent of saying, I need money, but I don't want to get a job because the job has to pay taxes. So I don't want to get a job, but I need money. I just don't want to pay taxes. Do you know how asinine that sounds? I do not understand that. My itty bitty baby brain cannot conceptualize why paying taxes on the gains, meaning you have more money in your account than you used to, is a problem, and you'd rather hold on to it and watch that investment go down because you don't want to pay taxes. It's exactly like, I need money, but I don't want to get a job because I don't want taxes. I don't want to pay taxes. God, give me a break here. I'm done with this video. Your turn to rank it. But wait a minute. I know I'm just some snarky guy on the internet, but my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been trading successfully since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, I want you to rank this video. I'm not going to rank it. You're going to rank it. Tell me how you'd rank it, and of course, subscribe if you haven't already. These are the rankings we got this week. I think I have one more I need to add onto this from this morning. Where would you rank this video? That's what I want to know. This was this morning. All right. Oh, twos, 2, 3, 4, 2, 2, 3, 2, 3. Okay. I'm going to say probably between 2.5 is where I think we're going to rank it at. And so what is the S&P 500 trap? What is the trap? This is what he was saying. What is the trap? Maybe in the last 3 minutes he says it, but he didn't say what the first 3 minute was. Is it the fact that the market is going down, and if it's going down, that's a buying opportunity for the smart people like him, and that dumb people like me don't know what we're doing? I don't know. Man, I want more better videos. This is no fun. Wimpy. Sorry, I read that as Wimpy. Wild Stimpy Norwood, dose, I'm in Mexico. But if you not cash out gains from your broker, you still need to pay taxes in the US. I mean, if you sell your stock and it's got gains, you have to pay taxes on those gains. So let's say, for example, it went from $10 to $11. You owe tax on the $1, and let's call it 20 cents. Okay, that's a hell of a lot better than my $10 investment going to $9 because I didn't want to sell. That's just my opinion. And I don't understand that. But you know what I do understand is it's time for today's member highlight and this week's weekly winner circle. Oh, and by the way, I know that you all are about to jump over in the Discord and put your stuff in at the last moment because you forgot, but it's too late. I got my list already. We have 29, probably all gentlemen, who posted in the share your big wins section in our Discord. Let's go through a few of these. An Ask Q, I know he's here live. Hey everyone, I just joined Outlier. Super excited to be here. Still new to the world of stocks, just 3 weeks in, so I'm learning everything from scratch, literally. So far, I watched hundreds of YouTube videos and read many articles, but mostly all of them felt off to me, even though I have absolutely no knowledge or basis for that conclusion. But Outlier, for some reason, it felt comfy and it felt reliable, especially because Chris doesn't overwhelm with too much information. Instead, he provides guidance or guidelines and formulas that actually make sense. I'm looking forward to learning from all of you and improving my skills. Thanks for having me. Dude, I'm so glad you're here and Ask You. Let's look at something else. Let's see. Scroll up a little bit. This is Hans. Hello, everyone. I am now an Outlier 2. Greetings from Hungary. Quick introduction. My name is Hans Wilhelm. Hans Johann Willem. Sorry, I'm from Texas. I don't know how to say anything correctly. So you can call me Hans or Will. Can I call you Hans, like in an Arnold voice? Hans. I'm so glad you're here, my friend. Just pick what you want. I'm 56 and new to trading. I started 5 months ago, and yes, I made all the beginner mistakes. I searched on YouTube between the majority of wrong videos, and I found Christopher's videos. Those helped me a lot and made me decide to become a member here willing to learn how to trade. And like I say, I live in Hungary, but I'm Dutch. I work and live in this country as an engineer in the steel industry. I hope to learn a lot. Have to figure out what will help me here to get better. I only bought stocks that I want to learn how to trade with options and go short. I now have a trading 212 account. If there are better options, don't hesitate to give them some advice. So Hans, welcome, man. And welcome to everybody. This is so much fun. I'm so glad that we can be a part of this together. And this is so much fun too. In our weekly winner circle, if you posted in the share your big wins, we do a $10 Amazon giveaway each week, mainly just because we want to do something fun for you. And we're going to use those as testimonials. So fair warning. But I think it's totally worth it to get you guys. So we are going to do 2 giveaways this week. Basically, if it's 20 people or less, it's 1 giveaway. If it's more than 20 people, I do a giveaway for 20 people. So there were 29 this week, 29 mostly gentlemen, I'm sure. So there's going to be a group of 14 and a group of 15. I know the odds are not quite weighted in your favor on the group of 15, but sorry, that's what I got to do. So in the first group of 14, we've got Craigham, Warfish, Gimme 312, Shane, George, Brian, MT Bor, Brian again. Different Brian's, by the way. Jose, Salty Dog. I know that's Salty Brad right there. Salty Dog, Frogman, Party Van. Why are these cut off? Party Van and Andy 987. And then we've got in the second group, we've got, hang on, my scrolling is not right. There we go. Jim S, Peter, Fred, Dave, Lego My Ego, Whoa, J Marcel, Jean-Louis and his Bluefin traders right there. Edge of Creation, Funky Plasma Man, Nicolay, M Wales, Michael Wales. Bro, where have you been? Albertone, Mark H, and we got the Danish dude. All right, so this is gonna be fun. I love these. These are so much fun to do. Oh, that's sweet, Nick. I'm a winner twice a day with Chris's live chats. So first group is 1 out of 14. Yes. So when I hit the generate right here, it's going to tell us who the winner is in 3, 2, 1. Number 10 is Jose Figueredo. Jose, I hope you're watching live, my friend. Congratulations on that. And let's see who's going to win in the next group here. So this is 1 out of 15, right? Yeah, 1 out of 15. Congratulations to Jose on the first winner in 3, 2, 1. Number 5, Lego Miego. Very cool. Congratulations to both of you guys. Let me put this in the Discord real quick. Let's say, in the share your big wins. Congrats to at Jose and at Lego for being this week's winners. At April, get April to send that over to you guys. You know, this is a ton of fun. I'm really glad that we can do that for you guys. That's what I care about, is taking care of you, and I hope that comes through. I really am having such a fun time hanging out with you guys every day, and the way that you can pay me back is just by telling everybody else about Outlier, right? That's the first rule of Outlier, is you tell everybody about Outlier, and that's the way you can pay me back. And of course, you can hit the like button too. Now, I know I won't be trading anything because nothing came through on the scanner, but hey, listen, you can still save 64% on the annual pass. That's just 82 cents a day over at outlier.com. If you're on a monthly trial, shoot us an email, tell us that you want to upgrade, and we'll handle it from there. But I'm ready to start looking at your stocks. I don't have anything that's going to come through today. Nothing pulled through on my scanner. And I do have to bounce in about 10 minutes. I have to bounce in 10 minutes. So I need to see what you're trading in the chat. Let's go. Light it up. I want to see them. And while I close a couple tabs, you guys put that in over there. Okay. Stella wants to look at LNG. Stella for the LNG. Did I close TrendSpider too? Yeah, I must have. By the way, there's this really cool thing that I found called Wallpaper Engine. I know you can only see half my screen, but it's an AT walking, and there's like little spaceships that fly through here. I think that's so much fun as my wallpaper background. That's definitely worth the $5 if you ever want to upgrade your setup. Just Google up Wallpaper Engine. That's super fun. They got tons of different ones to me. Need to get a Batman one on there for sure. All right, let's go to my account. LNG got a buy signal. Let me zoom in. All right, buy signal came on February 26th. LNG's heat map is getting, actually the fear is really evaporating out of here. Definitely getting a lot more greedy. And current the heat map value at the time was R24. Today it's at R4. So the heat map points has come out quite a lot. We are going to be making an upgrade to this in the next week or so. We're going to be going from instead of G0 to G50 and R0 to R50, it's just going to be a 1 to 100 scale. And so 0 to 50 is going to be fear, and then 51 to 100 is going to be greed. Should be easier to read in that case. And also easier to set these alerts up here. That was one thing that we're trying to improve is how can we make this easier for you? So we're going to have a little slider icon that says when it gets to this or above or this or below, that's what we're looking for. Should be a lot easier to manage and understand what these values mean. But the energy sector is getting more fearful while this one stock is getting more greedy. Super interesting divergence right there. Let's go in and see if there's any outlier blocks on top of it real quick. Ooh, this one's really sideways, isn't it? Like, look at your 10, 20, 50 right here. I mean, they're all stacked right on top of each other. This is one where it's got a couple bullish order blocks underneath it. But because of this sideways movement right here, it's going to take some sort of catalyst to push it one way or another. If I had to guess, and it's completely a guess, and I'm not calling for a moonshot right here, but if I had to guess, it would be up. Now I'm basing that on a double order block right here. You've got some room up here, and this buy signal, and the fact that it's getting more greedy and less fearful. That's my opinion, completely opinion. Take that as you want. But thanks for that, Stella. Really appreciate you. Ozzy. You got it twice in one day, dude. Twice in one day. Ozzy wants to look at City for a short. That's just the letter C. Oh my gosh. Oh my gosh. I didn't see that before. And here's a great example. Here's a great example of why you don't have to hold a stock that's going down, right? Let's say your outlier trend template got you in and out right here. And maybe you got in on this candle where it crossed over, right? You could wait until the first close under the 10 and make 10%. You would make 10% in the span of 14 days, no stress, because you can see the trend templates moving in that direction. It closed over the 10 EMA. And then maybe you decided, since it closed under the 10, I'm not really going to hang out. But what you did do is you got out of the way and didn't have an 11% loss and watch that round trip right back to where it came from. Isn't that cool? Where you can see isn't this great? Haven't we like opened your eyes to the market? Right? You can see what the market is doing. You can like I always say, let the market tell you where it's going. So let's go to Citibank here and let's zoom in on the 3-month chart. Now, I know one thing we also are doing is for a speed improvement. We're going to be defaulting to 1 year because when it loads the max view, it's a lot of data points that has to load in, which is why it takes the amount of time it does. But if our standard view is 1 year, it should load a lot faster, obviously, instead of like 5 years of data. Got a sell signal back here on February 4th. The heat map was super greedy, up at 42 out of 50. You can see it has evaporated and is on its way down into the fear category. The whole financial sector is going into the fear category as well. City for a short looks pretty sharp, but big asterisk right here. A short from here is a bit of a risk to me, and I'll tell you why. Because you've got 6% up to your 10-day moving average, 6%. If I were looking to short, I'll tell you what I would do exactly. I would be waiting, and I don't know if it'll ever happen, is the thing, and you don't know. I would be waiting to see if it can come back a little bit, maybe up like this, to where it bounces off that 10-period moving average. Let's just extend this like this here. Let's say your 10-period moving average goes out and it bounces off of this. That's a low risk entry here. This is a high risk entry because it's got 6% to get to a key moving average, 6% up. However, if you wait and if it does go back up, that's a big if, you can get in here and you might have 10 cents of risk. You might have 20 cents of risk. You won't have 6%. You might just have like 1 or 2%. Does that make sense? Right? Because if you're using a trailing stop on a moving average, and you could have any other different way to keep your trailing stops. If you use a trailing A moving average is a trailing stop. You want to be as close to that as you can at entry. That way you're taking as small of risk as possible. Ozzy, I will send you an invoice for that, my friend. Dot wants to look at Dot is thirsty. She wants some Coke Zero. I assume that's a she. Could be a he. More than likely, 91% likelihood that it is a he, I should say. Let's look over at Coke. I know the last time we looked at Coke, it was in this crazy move. And here's another example of why you don't have to hold a stock as it's going down. You don't. Let's say you wanted to buy the dip right here at $67. Rather than buying it on its way down, let it figure itself out, let it come back up, and then you can still get in at that $67. But you're doing it when momentum is at your favor and it works for you. Man, I hope I've enlightened y'all so much. I really, really, really hope that when you come to see this stuff, it's just like light bulbs after light bulbs every day. Okay, got a sell signal a couple days ago on Coke. It's G45 out of 50. Ultra greed right here. The staple sector is also a bit greedy right here as well. I would say whenever this gets really high, this can act like a rubber band. The further greedy or the further fearful it gets, the more likely it is that I've seen that it can snap back. And when it does, it can be pretty brutal. I think Kroger was one. I know nobody asked for Kroger. No, maybe it wasn't Kroger. Who was it? There was someone the other day that got like ultra. Let's look at Hims. Maybe it was Hims. Let's look at him. Oh my gosh, Hims. I know nobody asked for Hims. I'm sorry. I've hijacked your stock pick at the moment. I think Hims is one that like was absolutely at the peak. Yes. And this is data you can't get anywhere else, right? That's that investor sentiment that we want to see, that we want to have in the back of our pocket. Look at this. It maxed out at 48 on the greed and then super snapback. So the day it maxed out at 48 was this day right here. And I'm telling you, when it's down 50%. That's what okay, this is such a great example. That's why, oh man, I got to go. My alarm just went off. That's why I say when this gets really high, you have so much more information at your hand by having outlier, because when it gets really high like this, look for snapbacks. I'm not saying counter trend trade it, but I'm saying that is a great time to start looking to take profits. And what happened right after that, it peaked, snapped down 50%. Goodness gravy. So I'll do one more. Just one. Randy says 10 EMA is now a gospel. Randy, it's good to see you, my dude. I'll do one more because I really do need to go. My son Elliot's going to be standing on the curb like, Dad, what have you done? How could you abandon me like this? JD from Chris Weir. All right, this one. This is a really ugly pattern. Look at this. Like day after day, up and down. Very volatile. I mean, under the 20, way over. Under the 20, way over. I don't even know how you would trade this. That looks like one where if you wanted to trade it, you basically, I put in JF, my bad. If you wanted to trade JD, it's almost like if you wanted to set your money on fire day after day. Like that one looks really, really tough to trade. Or maybe it's the opposite. Maybe it's the easiest trade ever. When it goes down, it bounces right back up. Oh, Brian. Yes, got the light bulbs. William, 1, 2, 3, 4. This guy talks way too much sense. Weird on YouTube, isn't it? It's so weird on YouTube. Yeah, we got the sell signal here right before all this choppy, ugly mess. But this one peaked around G26, started getting a little less greedy. Actually, the greed's ticking up a little bit, and the discretionary sector still continues to be fearful. And here's the deal. If you found a stock that is really working in this market right now, it would be working even more betterer. It would be huge if the market were strong, if those sectors were strong. It would be like a slingshot, helping click it up higher, way, way higher. So listen, I got to run. I really apologize that I got to run. But listen, if you are an influencer of any size in any niche, please send us an email over at support@outlier.com. We would love to work with you. Please continue to tell me what you're trading in the chat. We'll look at those over the weekend and come back on Monday, where outliers like us will save time, make money, and start winning with less risk together as a team. And of course, YouTube is going to pop up a couple recommended videos. I recommend you click one of them. And again, my apologies that I got to run, but I recommend you have a fantastic weekend. I'll see you again on Monday.